So Michael Burry is saying that we are experiencing a bullwhip effect. Hi everyone, my name is Tim, and I just wanted to bring you this information about Michael Burry's latest tweet and what's got everybody so riled up on Twitter. So in this video, really what I want to cover is number one, who is Michael Burry and what is this tweet all about? What is the bullwhip effect? Number two, how does this affect you and your decision making in finances or in investing going forward? And then number three, what do you think the Fed will do? I'll get into what I think the Fed's going to do. By the way, guys, I'm not a financial planner. I'm just a mortgage broker bringing you my perspective from an investment standpoint and a mortgage standpoint. So anyway, guys, let's just get into it. What is it that Michael Burry said? And who is Michael Burry? Well, let's discuss who Michael Burry is first in case you're not familiar. Michael Burry was the guy that they played in The Big Short that decided to bet against the real estate market. In the 2008 financial crisis, before the 2008 financial crisis, Michael Burry went out and got a lot of these different companies to make up some weird investments. You guys should watch The Big Short if you haven't seen it. And from that, he ended up making hundreds of millions of dollars for him and his investors. Anyway, Michael Burry's done many, many amazing things, calling a lot of crashes before they happen. So when he says something, people typically like to listen. Okay, so what is it that Michael Burry said that's got everybody riled up on Twitter? All right, let's just take a quick look. Okay, so this is the tweet. It says, this supply glut at retail is a bullwhip effect. Google it. Worth understanding for your investment endeavors. Deflationary pulses from this equals disinflation and CPI later this year equals Fed Reserve itself on rates and QT, meaning we're back in the middle of a cycle. Okay, so what exactly is the bullwhip effect? Basically, the bullwhip effect is when the retailers, in this case, they think that the party will never end whenever it comes to supplies, right? So they get this sudden surge in demand, and then they go ahead and order and overorder to the point where now all the shelves are full because they overpredicted what the demand would be in the future. Now, the reason why it's called a bullwhip effect is because you're also going to have the wholesaler behind the retailer, right? The person that they get it from, and they're going to order a little bit more supplies. And then you also have the manufacturer who's now going to manufacture even more goods. Now, with all these goods and all these things on the shelves, everybody's actually wanting to get rid of inventory. So right now, what is Michael Burry talking about? Let's look at this article from CNN. All right. So Michael Burry was talking about this article from CNN, and listen here, it says, just keep your returns. Stores weigh paying you not to bring back unwanted items. That's how desperate the situation has got for retailers. So what exactly does this mean? All right, so in my opinion, what he's trying to tell us is that the inflation is going to be over sometime this year. That's right. He's saying that the inflation will be transitory because of this bullwhip effect. So what Michael Burry is saying is essentially what could happen is the Fed could end up with disinflation or deflation, which would be even worse than inflation. Given that, it's possible that they have to end the QT, the quantitative tightening, maybe even reintroduce QE or cut the Fed funds rate. That's some big news. That is not what the market is expecting. It is not what the market's pricing in. But here's the deal, guys. We gotta take what Michael Burry says seriously, because he's not only called the 2008 crash, but he also called the dot-com bubble. So this guy really does know what he's looking at when he's looking at some of these bubbles or some of these big pops. As a matter of fact, his net worth is about $300 million from being able to predict these downside crashes. If you haven't watched The Big Short, by the way, I encourage you to take a peek at it. Okay, so let's assume for a moment that Michael Burry is right, and let's say that we are going to go into a deflationary or a disinflationary cycle, and with that disinflationary cycle, the Fed is going to have to cut rates, go into quantitative easing, or at least stop quantitative tightening. So what will that do to the markets? Well, if I had to guess, I would say they would shoot, the asset prices are going to shoot back up, and borrowing is going to take over again. We're going to see another refi boom, and it's possible that the real estate market takes off again. Why would the real estate market take off again with all of the exuberance that we've already experienced? And I know that there's so many people posting about the real estate crash that's coming, or the foreclosure crisis that's coming. Guys, there's some foreclosures happening, sure, but there's still a lot of short inventory. And that's a big thing. We can't discount the amount of inventory. In fact, let me just pull up this chart right here so we can look at the difference in the inventory from the great financial crisis in 2008, when real estate values plummeted 33% nationwide. Now there are people claiming there's going to be a 40% crash. I just want to show you something why I think that might be hard. All right, so here is U.S. total housing inventory, and this is all expressed in units. And if you can see here, this is the 2008 era right throughout here. Look at how much inventory that we had. Okay, now down here is where we're currently at, and we are still, guys, at an all-time low for a number of units. Okay, so now we've had a chance to see the fundamental analysis that Michael Burry has presented us with. Let's look at some technical analysis now, because I feel like if the two come together, then it's a little bit stronger of a case than just having one and not the other. Okay, so what is it that we have here that we're looking at? This is the federal funds effective rate. I pulled this from the website FRED, which is the Federal Reserve Economic Data. A lot of you might know, or some of you might know, I love that website for some of my graphs. So what do we have here? I drew a technical analysis line that goes from the peak here of 1984. And you can see here there's another peak. You can see here there's almost another peak. Doesn't quite get to the line. Again, almost another peak. Boom, right there, another peak. So the peak should be right around there for the next cut. So there are some things to, look at whenever we're looking at what Michael Burry said. Now, the way I was looking at this chart originally was just a little bit different, and let me show you exactly what I mean. Okay, when I originally saw this chart, I thought to myself, well, the trend has been straight down, right? The trajectory. But we can't really go down much past this area because there's no room unless we get into negative rates. I don't see that happening, by the way. So it would appear to me that there is a cycle here, right? And then there's a cycle here. So maybe there would be another cycle here, right? Another head up for the next few years. But that's not exactly what Michael Burry is saying. And anyway, guys, I don't know if this means that they're going to end up cutting the Fed funds rate or if they're going to stop this QT. I'm keeping my eye out, though, really close. And I'll make sure to keep you guys notified as well. So let me know what you guys think. Do you think they're going to cut the Fed funds rate? Do you think they're going to stop QT, quantitative tightening, maybe start a little more QE and pump some more money into the system? Or do you think that we got inflation here to stay for the next 10 years and it's just going to be up, up, up on interest rates? All right, guys, I hope you enjoyed my perspective. Hope you got a little bit of information. If you enjoyed this, please like, comment, share, and subscribe. All right, folks, I'll catch you on the next one.